We have this amazing tax break system in the UK that is the envy of the world. The Enterprise Investment Scheme and the Seed Enterprise Investment Scheme. But actually then to take advantage of those, individuals have to kind of jump through so many FCA imposed hoops and terrifying risk warnings, and I think it puts people off.
Hi, I'm Belden Menkus. Welcome to the Purposeful Strategist, the podcast that shifts the conversation about purpose and strategy from what organizations should do to what business leaders are doing and what they've learned along the way. My guest today is Sarah Turner, co-founder and CEO of Angel Academe, the UK's most active network of female angel investors. Sarah first joined the podcast in March 2023 when we explored how she built Angel Academe around a clear purpose: to get more women investing and to channel capital into female-founded tech startups. Since we last spoke, a lot's changed. I'm eager to have Sarah back on the podcast to hear what led her to take the leap into fund management, how the network continues to evolve, and where she sees the biggest opportunities and risks for inclusive investment in the UK. Sarah, welcome back to the Purposeful Strategist.
Thank you for having me.
No, it's great to have you. Really great. So I just wanted maybe to get us started, you could give us an overview of how Angel Academe's evolved since you were last on the podcast and where things stand today.
We're still an angel network at our heart, but we've continued to evolve as a network. So you learn something new on every investment round you do. And we've now participated in well over 100 of those. We've backed 55 female-founded tech and science-based startups now and counting. Some of them are doing well, despite the very tough economic environment since we last spoke. And we've just launched an EIS fund, so we're raising investment for that. It's the very first one in the UK for female founders, and I'm hoping it's going to make angel investment accessible to even more people as well.
So a lot of things have changed, clearly some at Angel Academe, which I want to dive into and particularly to understand a bit more about the EIS fund. But if you think kind of both the market and maybe even how you're thinking, what's changed most? What stands out for you?
I think the biggest thing that's affecting all of us, every business in the UK and individuals, is that we're just in a far less favourable economic environment where, you know, everyone's feeling poorer. Businesses are, and it affects the ability of startup companies to be able to grow as they had hoped, and it affects the ability of individuals to invest and feel confident about investing. And, you know, we've got higher interest rates, so actually putting your money somewhere safe is a more attractive prospect at the moment. People are feeling insecure. But of course, you know, ironically, it's this very uncertain environment that makes it a good time to invest. We're seeing plenty of great opportunities. There's a huge amount of innovation going on. AI is moving very quickly. We're seeing lots of great opportunities in that. But people need to feel confident. They need a stable economic environment to recover the confidence in the investment market. And it's not just at angel level, it's probably even more pronounced further up. You know, acquisition activities, very slow, and that has a trickle-down effect across the whole sector.
Seems to me last time we spoke, you sort of had the idea in your mind that a fund was something you could set up, but it felt to me like you were a bit sort of hesitant about it. What's changed, and then what did it actually take to bring this EIS fund to life?
Frankly, we're not an FCA regulated business, and I have no intention of becoming one either. It's really not what I want to do. So we had to find a partner, and we had to find one with a model that would work for us. The main thing is I want a low fee model. I don't want investors to be paying a huge amount of their investment amount going on fees to run the fund. And we're partnering with an organisation called Syndicate Room. They're FCA regulated fund managers, they've been raising EIS funds for 10 plus years. They're very technology driven. So it means that in partnership with them, we have a fee light, very efficient way that works perfectly for us as angel investors, because they will provide that sort of, the back end regulatory technology bit. We will focus on finding the investment opportunities, doing the due diligence, then manage the business once investment has happened. It's been a huge amount of work to get all our plans through the FCA. There's an individual approval process for each fund. So that has taken a huge amount of time. But we're there, and we're in fundraising mode at the moment.
How does that sit alongside Angel Academe's original model? Are you sort of anticipating that most of the people who will put funds into the EIS fund will be people who are part of the network anyway, or sort of network adjacent? Or are you looking to sort of go big with it, if I could put it that way?
Yeah, it's a bit of both. So, when we were exploring the idea of doing the fund, I did lots of research with the network because they're the people closest to us. They were very supportive of the idea, and some have chosen to invest. There are others that specifically like to do deal by deal investing, and we absolutely want that to continue because that's at the heart of what we're doing. But really, it's an opportunity to reach out to a far wider audience. Deal by deal investing as an angel investor takes quite a chunk of capital and also a bit of time to do it properly, because you are, as an angel investor, meant to be getting involved in the company and supporting them and contributing to the due diligence and the decision-making process. The fund is much more passive. If you don't have the time and you don't yet have the funds, you can make a single investment, £10,000, and your money will be deployed across 7 to 10 investments is what we're targeting. And you'll benefit from exactly the same EIS tax reliefs as angels. And what's crucial to me is I'd like to see this as a stepping stone into angel investing. So people who invest in the fund, if they want to get involved in the angel network, they're very welcome to. So hopefully they are our future angels as well as fund investors.
Right. So to some extent, if you're interested but you don't have the time, or if you sort of want to try it a bit before you dive in a bit further, it's a way you can do that.
Absolutely, yeah.
And do you see this opening up new strategic opportunities for you? I mean, beyond obviously having a fund rather than deal by deal is a strategic move, but do you see things beyond that?
We want to become an even more important player in the marketplace in which we operate, and that comes with managing more money, more resources. So either having more people in the angel network and more people actively investing, or having this fund that operates alongside us, and we're hoping for both. We'll be able to do more deals, we'll be able to write bigger tickets, so we're hoping that makes us more attractive to a wider range of businesses. They can be at different stages from where we're currently focused now. It is increasing our profile. We're seeing more businesses come, and basically the proposition for female founders is bigger tickets but no extra work, because basically they go through the same diligence process with the angels. If our angels are happy, it then goes to the investment committee for the fund. As long as it meets the criteria, the rules of the fund, then investment follows. So same process, potentially twice the money.
Sure. It does seem to me that one of the founding reasons for Angel Academe was some rather shocking, worrying, depressing, whatever emotional reaction you want to have to it, statistics about both the percentage of women who could invest as an angel, who actually were, sort of that sense of, that's not for me, and then also the number of startups where they were female founded were getting funded. Is that changing?
Not really. The percentages haven't moved at all, really. I think what's happened is the market has just become bigger. There are certainly more female founders operating are more female-founded or co-founded businesses, but there are more opportunities. And actually, the amount of investment that's going to female-founded businesses has not really gone up. We've made a difference, but to a relatively small proportion of that market. And the number of investors, likewise, it's still very small. We've made good inroads. I'm less worried about the future because I think there's a whole generation of younger people growing up now who are sort of more connected to their capital, more self-assured about investing it themselves. They've been aware and connected of the startup and investment culture. So I think we've got a good pipeline of angel investors for the future, but we haven't made inroads into that generation of women who I think look more like me. They're a little bit older. They've made their own money. They've got amazing skills. And, they're at the stage of their career where they have a bit of capital that they can do something a little bit more high risk and interesting and meaningful with. But those women are quite hard to find. They haven't sort of bounced up so much against this world. So it's kind of newer to them. And, really acquiring those people is a fairly organic, slow process. But that's where we're hoping to make inroads, because I think it's kind of an obvious fact, but angel investors skew older. It's older people that are got a little bit more time and they've got a little bit more money.
Is there something that feels to you like it's sort of in the way or missing that could really change the game?
I think, we have this amazing tax break system in the UK that is the envy of the world. The Enterprise Investment Scheme and the Seed Enterprise Investment Scheme. But actually then to take advantage of those, individuals have to kind of jump through so many FCA imposed hoops and terrifying risk warnings, and I think it puts people off. We have a lot of people who use wealth advisors or financial advisors to help allocate their investments, and many of those people, because they're regulated by the same FCA, are very wary about telling potential investors about EIS. They haven't said that they're interested in high risk opportunities in their form. Who does say that? Who ticks that box? Everyone puts themselves in the middle, don't they? Or the bottom. We've got this fantastic tax break scheme, which is becoming more and more relevant. There are now limits to how much people can put tax-free into their pension, and now their pension's going to be exposed to inheritance tax, and the EIS benefits come with there's no capital gains to pay if you strike lucky, and no inheritance tax as well if you're unfortunate enough to die before your investments mature. I don't want to pull the wool over anyone's eyes. It is a high risk investment strategy. We spend a lot of time educating our members on how you manage that risk. You invest what you can afford to. You're not going to lose it all because of these tax breaks, but it's your fund money. It will add some spice to your portfolio. But, if you look at where the returns in portfolios come from, it's from the high risk area, but you only allocate a small amount of your investment allocation to those high risk areas. So we need that message to come through. And as far as I can see, the FCA are doing their best to terrify people. Every time we talk about the fund, we have to mention that people can lose all their money. It's high risk, even though EIS means you won't lose all your money. But I won't go into the detail now. And it's just when Rachel Reeves is talking about getting people to switch their cash ISAs into stocks and shares ISAs. So why are we stopping perfectly intelligent people kind of doing what they want with their money? And I'm not one that's telling other people what I'm not doing myself. I've committed a chunk of my investable assets to angel investing. I love doing it, but I believe that out of my portfolio, I'm going to have some good returns, which will more than make up for the ones that went wrong along the way. And I'm having a huge amount of fun. The people I've met through it, FCA only looks at the risk element. They don't look at the potential upside way beyond just the financial upside. What I love is, being able to connect with my capital and deploy it into businesses that I've met and I've chosen and I've mentored a bit, and I've, being part of that journey is super exciting.
You've touched on something that certainly caught my imagination when you and I first spoke and since, which is sort of this idea that Angel Academe is about something more than just the capital. It's about the community, the network, the expertise, the inspiration, a bunch of things. How do you keep that alive? Are there things you're doing specifically with the network to promote that and to strengthen that?
Yeah, so I just had lunch with a bunch of our members on Wednesday, and we've got a series of lunches through the summer. So that community is what really makes it work. I think to be an angel investor, especially if you're writing tickets are a certain size, you need to know who you're investing with, because no one person can do all the due diligence on a business. It's useful to be able to work as part of a team. And Jane over here is a financial whiz, so she'll interrogate the financial models. This person is having a look at the go-to-market strategy, and I can look at the bit that I know best, which is, does the team make sense, or whatever it is. So we've got this kind of very diverse, highly experienced, very skilled network, and it's the collective intelligence of the network that helps us do a good job. And, that collective intelligence works after we've made an investment as well, because they continue to support the businesses that they've invested in whatever way they can, or how the business needs. And of course, on the founder side, community is fantastically important. We're constantly hearing from female founders, it's a lonely job, so they need to have networks of peers, people who understand exactly what they're going through, that they can sort of privately confide in, things that they might not be able to share with their team. So we do some work to kind of build community amongst the businesses that we've invested in. We've got some particular events that we do with partners to try and support those businesses. And something we're trying to build is this Meet the Buyers event that we're running. Really unsexy name, I don't know what else to call it, but perhaps some of your listeners could come back with some suggestions. But that customer acquisition piece, especially small businesses who are trying to attract large businesses as clients, it's slow. So what can we do to help them meet them in the first place, but also accelerate that conversation? If they can generate revenue, it obviously helps them attract more investment in the future if that's what they need, or they can just go for profitability earlier and accelerate that way.
Earlier we talked about AI and how that so dominates right now the kind of investment story, and to some extent the kind of the news and the economy and everything else. If we could park that just for a minute, are there other things that you're seeing coming through in some of the startups that you think, now that's interesting, that's different?
So something that I didn't ever think we'd be doing is we've done some hardware investments. We've just been super impressed with the team and then what they're doing. It's a fertility device, and it's a clinical grade, clinically proven alternative to IVF, and you do it at home. There's no hormones involved. And what the company has built, and it's absolutely fantastic, is not just the device, but a virtual fertility clinic around it. So in a way, going against the grain of AI, they are adding more humans into the process. So you get that, because, what is a very tough journey, isn't it, for their clients? So that's evolved very nicely since we've been involved. We've seen lots of babies being born through that process. Similar results to IVF, but a fraction of the cost and none of those nasty hormone injections. So, what's not to like? Their next step is entering the US market. Challenging, but they have FDA approval already, so they're good to go on that. So that's a particularly exciting business. The other hardware business, MoveTrue, I think in a nutshell, using motion capture technology to prevent injury. So Naomi, the founder, was a ballet dancer early in her life, and then her career was destroyed by an ACL, anterior cruciate ligament injury. And she had to retire, and that was what gave her the initial idea for building her business. She then went and did an engineering degree, and several years later, now we have a very sophisticated bit of kit that's being used by sports teams and trainers and coaches. It's about preventing injury. So if people are moving correctly, then they're less likely to be injured. And I think ACL, anterior cruciate ligaments, have destroyed many very promising careers. I mean, awful statistics from America about the average career of a basketball player is, once you start playing, even at relatively low semi-professional college level, it's 3 years. They retire. These teenagers retire through injury.
Sarah, what's interesting to me about those two examples, when you said hardware, the question that was in my mind was, so is this like chip hardware, like computer, But what I really love about that, I think sometimes maybe other people, kind of forget that there's a whole world of manufactured things that aren't computers at all, but can make people's lives better in all sorts of ways. Yeah, I think that's really interesting.
I mean, inevitably, there's a lot of software that drives it, but there's some definite hardware you need to capture this. So all the complicated issue around supply chains and having to guarantee hardware and take care of repairs and maintenance and things like that, and probably software upgrades and all that. So yes, not to underestimate the challenges, but some of these companies do break through, and where we can see a clear need and a clear route to market and some early traction, we're very optimistic.
Just to come back to something you were talking about a couple minutes ago, which is this challenge that startup businesses and maybe small businesses of all sorts have in finding ways to do business with big businesses. I'm just curious if there's models you've seen in the world of people who are making that easier. I know the government's always trying to purchase more from smaller businesses or whatever, but it doesn't sound like that's really turned the tide. Is there anything you've seen out there that looks like a promising idea for the future around that?
I don't think there's any simple lever, but we all know that innovation comes from small businesses. It doesn't come from big businesses. Even Google, they acquire a lot of the innovation. They're no longer doing so much themselves. There's been a lot of what's called open innovation, where corporates kind of run programs to meet startups and things like that. But I haven't seen many successful versions of that in the UK. And there are all sorts of practical challenges around how big companies work with small companies, and the innovation team is often off left field in an organization and actually not very well connected into the bit that would need to deploy the technology. But I live in hope. What I find particularly frustrating is we've got a couple of companies in our portfolio that are working with the biggest banks in the UK, but neither of them are working with a UK bank client. So there's something more open to working with startups. And we're not talking small trial projects. We're talking about, these big companies have contracted with them and partnering with them or buying from them properly. There is something going on in the US where they're more open to innovation and taking a risk on a small company that potentially might run out of money and not be in business in a couple of years. You speak to people here and privately they'll tell you, oh, no, you shouldn't be trying to work with a company like ours. They should try and sell to other startups. And it just makes my blood boil.
I suspect those other startups don't have the problem they're trying to solve.
They don't have the problem they're trying to solve. They're not much of a market because they don't yet have the money to invest in these solutions. So, I think our big businesses need to take more risk, obviously do more of it, more aggressively, and champion it more. It will help their business ultimately.
We had Denise Massey on, who's the managing director of something called the Energy Innovation Center. And their whole thing is helping small businesses connect to big businesses. And I think it's funded by some of the big players in the energy space, where they're sort of saying, yeah, there is a problem here, and we need to find a way to connect. That may or may not be a model to think about.
Yeah, we do that ourselves. That was partly what I was doing in my consultancy role before. Lots of these organisations have these things. Every bank in the UK is doing something to support female founders, but they're doing everything except buying from them, even if there's a potential fit. So it's so easy to virtue signal, isn't it? And look, this is what we're doing. It doesn't mean that those innovations get into the real business where the business is going on.
Angel Academe received a significant amount of recognition over the last couple of years. So has that shifted how you think about kind of your role in, if I can use the term, the ecosystem, kind of the constellation of various players and what people expect from Angel Academe?
Yes, I mean, the whole thing's been a shock to me. I didn't think actually setting up a business meant that you had to personally be a figurehead and build some profile and whatever. It isn't really something that comes naturally to me. I'm a good doer, but the whole sort of thought leadership piece has been a bit of a surprise, but it kind of has to be done. It's expected of you. And I can see this problem. I can see the system's broken. It's not working for most people. We think we've got part of the solution. It's not all of it, but I'm trying to help drive some change. I wish it went faster and it was a lot easier, but that's life, isn't it? I think behavioural change happens over decades, not in 1 or 2 years. And, that's kind of what frustrates me. There's been a lot of talk about female founders and the lack of investment. And there's one article or one event, very little sustained effort. And what there's been has been a lot of talk, and we haven't seen big new pots of money come along.
Is there data that talks about the success rate of female founded or co-founded businesses compared to others? Or is that not that well documented?
What we can say is there's some emerging evidence to say that female-founded businesses are less likely to fail. That's not the same as being successful, but less likely to fail. I think we have a growing body of data that says that female founders do more with less. So their businesses are often kind of leaner, but doing better. We haven't had enough what's called exits, so the success stories, to have the complete evidence base. But in terms of return on investment, on paper, women achieve significantly more than men. And when you look at bigger companies, there's all sorts of evidence to suggest that the more women you have in senior roles and on the board and things, the performance improves. So there's a gathering body of evidence, but what we do know is that women get further with a lot less funding. That's proven. But the success rate, just because it's still relatively early days, we haven't got that data. We've only had a few small exits so far from the businesses that we've invested in. It's a 10-year journey. So most of our investments are, 4 or 5 years or less.
Looking ahead, over the next 2, 3, 4 years, what do you see next for Angel Academe and also for yourself?
So I'm hoping that we'll see some good exits from our portfolio as these companies mature. Then we can start to really tell people, look, we've proven it. We'd like exits to give us that evidence. I would like Angel Academe to continue in the future, but in the not too distant future, I'd like to step back a little bit, remain involved, but not be the person who's awake at night worrying about everything that's going on. And then I can go back and do a bit more angel investing and being a bit more hands-on.
Excellent. Anything we haven't touched on about Angel Academy you'd like listeners to know?
Well, we had this lunch on Wednesday, and it just reminded me what a fantastic bunch of people the investors are. We go round the table and everyone introduces themselves, and fairly competitive sports women in their youth, their entrepreneurial journeys, or a whole bunch of things, but just a high caliber group it is, and how much fun it is to be part of this community and be angel investing alongside them, and how much energy the entrepreneurs give us, how meaningful it is to work alongside them as well.
I think I know the answer to this because I think we touched on it when we spoke last time, but do you have to be female to be part of the network?
No. So I very much talk about women, and the Angel Network is 70% female. So I always joke that our diversity target is 30% men. So we have some great men in our group, and we're always very happy to welcome men who want to do their bit to support women, frankly. Well, we couldn't have done it without the men in our network as well as the women. And most of the businesses we're doing, quite often there are male co-founders. Usually we look for a female CEO, but very often the CTO is a male, just because of the training that people have elected to give themselves. Interestingly, we've got a pair at the moment. It's a female CTO and a male CEO, and we are coaching her to do the pitching to the network and things. And the male CEO is being very gracious and supporting this, and he loves it actually. So that's good. So, mixed gender teams are the norms. It's not about keeping men out. It's about bringing more women in.
You touched on sort of the educational choices that people tend to make and how there is a strong gender bias for some of them. Do you think that's going to change? Do you think that's inevitable? Is technology for females going to be a bit of a minority sport? Or is that, no, that's just kind of social acceptance and it'll change?
I hope it changes. I think a lot of women are missing out on a lot of amazing careers that technology can open up to you. I mean, I'm a non-technical technologist, I call myself. So I did do some computer programming back in the day, but I was terrible at that, and quickly moved into a sort of project management and program management and then consulting roles. But just having had that opened up so many opportunities to me. You don't have to be sitting at a desk coding. And in some countries, there isn't a difference between gender in computer science and the more scientific degrees. It's not exclusive to the UK, but maybe to the West. But we've got a lot of founders that we've backed that weren't born in the UK.
Yeah, there is something about the way engineering is viewed in the UK that I think if you took that label off it and you said learning how to get to create things that are good, or something, you kind of go, why wouldn't we want lots of people doing that? And yet somehow I think it doesn't get the I think, respect and kind of quite frankly, the money even.
Watching kids grow up, I see, girls being very happily playing computer games and doing all those kind of geeky things and tomboyish things, up until puberty, and then they suddenly switch off from it. So they often play less sport, stop playing the computer games. It's more about social media and their friends, and anything to do with computers is associated with nerdy boys. I think there's something to be said for hothousing the girls in these subjects.
Sarah, it's been great to get an update on where Angel Academy is and what you see forward ahead. I will look forward to hearing in 4 or 5 years, maybe a little sooner, about more exits. That'd be very exciting.
That would be wonderful. And not just from our investments, but other female founders. And particularly, in the areas where we don't see so many female founders being successful, so those technology and science areas.
Yeah. Good. Again, thank you for joining us, and I look forward perhaps to catching up with you at some time in a few years.
Thank you very much. I look forward to it.
Thank you for joining us for this episode of The Purposeful Strategist. In addition to being available on our website, you can find us on Apple Podcasts, Spotify, and Google Podcasts. If you enjoyed this episode, please do follow us and leave us a 5-star review. It helps others find the podcast. Thanks again, and join us soon for the next episode of The Purposeful Strategist.